I mean, as the years have ticked on, the more and more I've realized, like, if a company's just going to be niche, you might be in some trouble. If a company's going to be niche, you might be in some trouble. That's the more I've realized that. I mean, that's exactly what we've seen with the stock like Honest, a stock like Fubo. Both those companies went from people fearing about bankruptcy to all of a sudden people are like, oh, they're probably not going BK, and actually things are heading in the right direction here. And all of a sudden, the momentum is crazy. So, first quarter 2024 possible buys. Let's edit the list right now. Howdy, chat. Hello. I hope everybody's doing phenomenal, as always. Oh my gosh, look at Honest. What a flippin' flapjacking beast that stock is right now. Oh my gosh. Honest is, holy smokers, that's no dang jokers. Look at the move. Parabolic times parabolic. Oh my gosh. So this was less than 2 months ago. The stock's moved 194% in less than 2 months. Like I said, when the smalls move, they freaking move. It's insane. I mean, that's exactly what we've seen with the stock like Honest, a stock like Fubo. Both those companies went from people fearing about bankruptcy to all of a sudden people are like, oh, they're probably not going BK, and actually things are heading in the right direction here. And all of a sudden, the momentum is crazy. 194% in less than 2 months, man. Wow. Somebody says, what changed? Well, what I just said, people thought for sure it was going, a BK type candidate. Carla, starts to turn the company around. Then you have momentum come in small caps. Simultaneously, you got the Fed, who's not going to be raising rates anymore. At least that's a belief. And if anything, they could be cutting. That bodes well for small caps, right? And it's just a move. Crazy. I mean, just a parabolic move. But, remember, stocks like that got killed for over 2 years. So, I mean, every single soul that would have wanted to sell the stock sold the stock, right? So, it's just, man, that's quite a move. By the way, BTC down to 42 today. That's interesting. Kind of downward move there. Yeah, there's a lot of technical people starting to talk about PayPal's about to have a big breakout to the upside. You know me, I'm not really a believer in the whole technical game, but there are some folks that are believers that the baby's about to break out of a major downtrend it's been in. And blah, blah, blah. Anyways, I was looking at some of that this weekend. So, first quarter 2024 possible buys. Let's edit the list right now, okay? So what am I going to seriously potentially buy in the first quarter versus not? Would I potentially buy SoFi? I'll leave SoFi on it for now. Because I still want to track SoFi heavily. I want to see what happens this next quarter. I'm going to keep SoFi up there for now. Zoom. Would I potentially buy Zoom? Man, Zoom's tempting because their income statement's pretty dang impressive. Their balance sheet's pretty dang impressive. But with that being said, I'll keep Zoom on it for now. Whirlpool. I'll be honest, I'm probably not going to buy Whirlpool. Topgolf, Callaway, potential. I'll leave that on there. Align, I don't think so. Hims, I'll be honest, Hims is somewhat tempting. What the heck? Oh, great, my charts are all messed up again. I don't know why this always happens. Like, literally, I don't know why that happens. But, anyways, Hims. Am I going to buy Hims? I'm not going to buy Hims. I'm just going to be honest. Nvidia's a potential. I like it. Actually, the forward P on Nvidia is looking pretty darn attractive. Ally Bank. I say Ally's a potential. But dang, it's climbed a lot. Valuation's not nearly as intriguing now. I'm not going to buy an Ally Bank. PayPal, potential. Wynn Resorts, potential. TJX, I don't think I'm buying TJX. Baba's a potential. Cheesecake, I feel like I'm good on Cheesecake probably. So, but I might snag a little more share. So I'll leave that on for now. Target, still potential there. Estee Lauder, I'll be honest, probably not. RH, oh damn you, RH climbed a lot. I mean, it went from 200 to 300 like that. RH I'm going to leave on the list for now, because if we have any big drawback in the market, RH will tank. And then that could get it back intriguing again. Trade Desk, TTD. I don't see myself buying Trade Desk. Nike, I could see myself buying more Nike shares. Dutch Bros has climbed a lot. I don't see myself buying more Bros. Mattel. Mattel's a potential. Hood. I mean, the good thing with Hood is, at the end of the day, they do attract a lot of the younger demographic. They always have. The younger demographic eventually gets more money, right? And also, they are known as one of the places you go to buy Bitcoin. Coinbase, I think, is kind of the winner chicken dinner there. But outside of them, then I think a lot of people consider kind of Robinhood as a place to buy Bitcoin, Ethereum. So that benefits them. I'll keep them on there. For now. Jury's still out. We'll see what their next quarter looks like. Pure Storage is pretty intriguing. I never really looked into that company until about a month ago or so. And I actually kind of liked what I saw. With that being said, am I going to buy Pure Storage? No. Guess. What was Guess's balance sheet looking like? I can't remember what Guess's balance sheet looked like. Let's see. Oh yeah, I remember why Guess came to my attention. Cheap valuation and the earnings jumped substantially year over year. But with that being said, where's the balance sheet at for this company? Because you got to understand, in order for me to buy a stock, I really got to feel comfortable being in that stock for years to go in the future, right? And so that's what the tough thing with a lot of these stocks is, do I feel comfortable holding them for years, right? So that's where balance sheets come into. That's why I'm trying to think about the future. Where's this business at in 2 years from now, 4 years from now, 6 years from now, and trying to be able to see the vision there. That's where all that comes into handy. So $244 million of cash on the balance sheet. So this is a troubling part, right? Guess has basically been flattish with revenues for years, right? You go back to 2019, $2.6 billion revenue. 2020, $2.6 billion, right? And 2.5, 2.6. I mean, revenues have been pretty flattish for a long time. With that being said, gross profit has actually grown very nicely over the years, which is good. Operating income has grown substantially over the years, which is, good. They did have a downtick here, but so did almost every retailer. And obviously, other than Rona year, basically every year, very nice net income. It seems like a decent value here in Guess, because it trades so cheap. I mean, look at this baby. It's an 8 forward PE. And it is a consistent cash flow income statement beast, right? Throws off a lot of operating income, a lot of net income year in and year out, pretty much. I mean, they used to be in a very unhealthy spot. I mean, you look at, it's interesting, prior to that other gentleman coming over, right, the CEO, it looked like their income statement is very weak. I'll leave them on for now. It's a potential. Not for sure, but it's a potential. Bath & Body Works. Jeez, what a move there for Bath & Body Works. Yeah, Bath & Body Works has made a lot of its move already. So, Bath & Body Works. Do I see myself making a move on Bath & Body Works? Yeah, probably not. My baby said no, so I'm going to say no. Avant, I pick it up at 10 cents, yeah. Etsy's a potential still. I don't love Etsy, but it is pretty intriguing. I mean, I do like their business model is very differentiated versus other e-commerce companies, right? Because custom products most of the time. And so I appreciate that. They're obviously never going to be some type of Amazon type company, right? Amazon's a whole different beast. Amazon, you're going to buy a pack of AA batteries. Etsy, you're just not. You're going to buy something very, kind of almost like custom more related. Yeah, and they got a restructuring going on, so they could actually emerge. They could emerge a lot more profitable in the back half of 2024 and going into 2025. But on the flip side, the thing I worry about with Etsy, I do have to worry about Etsy is, and it's funny somebody mentioned eBay, is I do worry that eBay, Etsy becomes an eBay type company. You may say, well, what's wrong with that? Like, you got your marketplace, you're maybe a little more niche, but you still got your marketplace. Well, let me show you eBay's stock over the years, okay? 1 year chart, 8% return. 5 year chart, 56%. 10-year chart, 90%, right? So, that's it's okay. Like 90% is 90% on a 10-year, but I mean, in my opinion, that's not that impressive. 90% in 10 years. Look at something like an Amazon in the past 10 years. Amazon's 671%, right? Amazon just has so many different ways of growing their business. They're not niched, right? The e-commerce is basically unlimited opportunity for them. Then on top of that, we know AWS, I don't want to say unlimited opportunity, but geez, it almost seems like it, right? And so they have many different verticals on how they can grow. Plus they own obviously Twitch, they own Whole Foods, they own these other businesses. So the thing that's beautiful with an Amazon type business model is they just have so many ways of growth, and that's why you've gotten such a great return in the stock the past 10 years. And I'm sure, if I had to say what's going to outperform each other over the next 10 years, Amazon and eBay, of course I'm going with Amazon every single time, right? And I think everybody would. So that's the thing I do worry about with Etsy is maybe they just become an eBay type company where it's niche. Yeah, they got their customers that use it, but it's more of a niche product. And it kind of stays niche. And so, ultimately it ends up being an underperformer over a 10-year span. That's something I worry about a little bit with a guy like this. I mean, as the years have ticked on, the more and more I've realized, like, if a company's just going to be niche, you might be in some trouble. If a company's going to be niche, you might be in some trouble. That's the more I've realized that. It's not bad to own, and when I say own, I mean like you actually have a more niche business and like you're the owner operator of the business. That you could actually be great in those situations. But when it comes to investing in public companies, where these companies are trying to scale market caps, billions of dollars, tens of billions of dollars, hundreds of billions of dollars, niche is not always the best. And so, when I look at a lot of my stocks, right? Many of these companies, especially a lot of my biggest positions, just aren't niche, man. They're just not. Meta's my biggest position in the public count, right? I think about Meta, I definitely don't think of niche. I think about everybody in the world uses at least one of Meta's properties, right? Tesla, do I think niche when I think Tesla? Not nowadays. Tesla 10 years ago, sure, it was a very niche automaker. Now it's becoming a massive giant. Every automaker wants to try to copy Tesla, right? When I think about Amazon, I mean, it's the opposite of niche, right? Like Amazon wants every single company to be their customer, every single human to be their customer, right? Elf, do I think about niche when I think about Elf? Absolutely not. I mean, it's a cosmetics giant now and just continues to grow, and, their customer base is everybody. From, teens to people in their 20s, 30s, 40s. I heard my mom uses Elf now, which she's in her 60s. That was pretty shocking for me to hear. I was like, what? My mom uses Elf? That's crazy, right? Target definitely is not niche. Texas Roadhouse, definitely not niche. Skyworks Solutions, definitely not niche. Nike, definitely not niche. Wynn Resorts, on the other hand, I would say is niche, right? Very niche. But the one good thing for Wynn is their customer base has so much money that they can spend so much money at their resorts. Like their customer base can drop 6 figures in a weekend gambling there, right? And afford to come back again 3 months later, 6 months later, and drop another 6 figures, right? So that's a good thing with Wynn. Shopify, definitely not niche. PayPal, definitely not niche. Cheesecake Factory, definitely not niche. So when I think about a lot of my biggest investments, they're definitely not niche. Palantir, I'd put them maybe a little bit in the niche category for now. At least on the commercial side. Government side, heck no. On the government side, Palantir is not niche. They're a big player in the government space, right? But we could say they're a little more niche in the commercial space as of right now. So somebody says Honest is a niche, absolutely. And look at Honest as an investment since it went public. Horrible. horrible. But Honest is more of a niche player, and it's just, like I said, it's not impossible to make money in those companies. It's just, there's a challenge, man. If you can't really scale when you're a public company, it could cause massive underperformance versus many other stocks in the market, right? So, the good news for Etsy Betsy is active sellers is jumping pretty strongly year over year, 19% growth in their latest quarter. On the flip side, active buyers not growing even remotely close. You'd like to see active buyers growing about as fast as active sellers, right? If I think about like an eBay, e-commerce is a massive industry, but inside that massive industry, you got somebody like an eBay, right? And there's certainly a player there. They're just so much of a niche player compared to, somebody like an Amazon, for instance, that's just gobbling up massive market share. Obviously, Walmart's a big beast in the e-commerce space as well, right? Even though we think about Walmart as a physical retailer. So, and no, definitely not confusing niche with popular. There's a big difference there. So, something to keep in mind there. If I think about, and when you think about popular, at the end of the day, it's like, who can afford something, right? If I think about Apple's not a niche company. They have I think their installed base is probably 1 billion people or so. Apple, right? And you look at nowadays, they sell into markets that basically everybody needs a computer, right? Whether that's a computer in your pocket, a smartphone, an iPad. And so that's like an extraordinary level of not niche, right? Because they're just, it seems like almost everybody nowadays has a smartphone. Like, it's crazy to think there's still people in this world that don't have a smartphone, but there actually are. But, those are just massive markets. So that's kind of the way I would explain it. But anyways, that got me a little sidetracked there. I still need to see this balance sheet from Etsy Betsy. $741 million in cash and cash equivalents. $234 million in short-term investments. It's very impressive. Because, one thing's about how big of a market opportunity you're going after, right? And then the second component of that is, how big of a player are you in that market, right? How big of a player can you be in that market? So if I think about other kind of more niche companies that have hurt me, it's Planet, right, and Avant Brands. If I recall, those are only 2 stocks that are red in the public count, or maybe 2 of 3. So they technically sell into a massive market, which is cannabis. Cannabis is a huge market, right? But with that being said, they're both very niche players in the cannabis market, right? And that's a whole other industry that's had a lot of troubles and things like that. But I think about like how big your industry opportunity is, and how big of a player are you in that industry, and are you going to be in that industry, right? So, anyways, that's just kind of the way I think about that. Now, the next thing I need to figure out is, are there going to be more stocks I add to the potential buys list? Another stock that I was just looking at here that's kind of, you can put it in the niche category a little bit, is Nordstrom, right? And if you look at Nordstrom's returns over time, it has not been good. But a company like Nordstrom, at the end of the day, I gotta say, it's kind of a little bit more of a niche company. Like, not everybody can afford to go to Nordstrom, right? Just bottom line, Nordstrom Rack caters a little bit more to the masses, but I would still kind of consider them a niche company overall. Even though they sell into clothing, clothing's a massive industry. But of this massive industry, like, how much of a player is Nordstrom? They're actually a very small player, right? And it shows in their stock price. Pull up a 10-year chart of Nordstrom stock. Pull up a 5-year chart of Nordstrom stock. Well, there it is. Pull up a 15-year chart of Nordstrom stock, and it's kind of going to show, right? Oh, man, Tommy's coming up. Got to record it. Here we go.
Okay, let's bring in Fundstrat Global Advisors Head of Research, Tom Lee, to this conversation. Tom, it's great to have
use
you
the Tommy motes. We got to get those Tommy motes going, the Tom Lee emotes.
Year-end price targets, the fact that you basically nailed it this year with 47.50 for the S&P, and of course, us sitting here at 47.74 as we talk about this today. Next year, you expect 5,200, so about 9% upside. But there's another group that you like even better. It's
there's a Tom Lee emotes. Tommy.
Well, I think there's room for a lot of positive surprise next year. Easing financial conditions and falling inflation and falling rates means we could unlock a lot of pent-up demand, both for consumers as mortgage rates fall, but also for a lot of capital spending. that sort of economic momentum really favors small cap stocks, which in our 2024 outlook, we highlighted they're at 1999 lows relative to the S&P. That was the launch point for 12 years of relative outperformance. And when you think about their small cap exposure to regional banks where asset quality can improve, I think this group could easily add 50% next year. Not that different than the fact that we thought FANG could be up 60% in 2023 because of the valuations being so attractive at the start of this year. So, yeah, I think small caps could really be the leading group next year.
Wow.
You know, Ben Emmons at New Edge Wealth put out a note over the weekend, Tom, showing that core PCE deflator's 6-month annualized rate, it's fallen below that 2% target of the Fed, and that since July, so when the funds rate reached 5.5%, Treasury yields and mortgages hit 15-year highs. That's when you saw essentially that 6-month annualized PCE cut in half. I mean, the chart is pretty startling. Does this disinflation narrative continue? Is it time to start talking about, dare I say it, deflation?
Well, if disinflation is taking root, which, look, when you think about cars, which is 11% of, CPI, core CPI, and I mean, used cars price probably going to fall 30%. I do think you could actually have an undershoot on inflation. It's much easier, though, for the Fed to offset this with cuts and then communication. And, the incentive would be for the S&P to actually, the Fed would like to see the S&P rally because that's one way to offset disinflation. So if you're concerned about an undershoot on inflation, it's actually more upside for equities.
Bob, do you see it the same way? And I ask because this last quote unquote mile of inflation, as we do move back towards this stated target by the Fed, we know historically can be very sticky. I mean, even just today, the Case-Shiller home price index showing another increase in housing prices. And I realize that's a lagging indicator, but your outlook on this and how key for the market to continue rallying in 2024 is it that we continue to see these prices come down?
Well, the Fed has benefited from a bunch of big disinflationary impulses in the economy. Tom mentions used cars, which have fallen pretty rapidly over the course of the year. And in order for them to continue to add that disinflationary pressure, they'll have to continue to fall at the same pace. Similarly, we've had, a buck decline in oil prices or gas prices over the course of the last 8 or 10 weeks. Those are things that are all adding up to bring that disinflationary pressure into the economy, but they won't necessarily last forever. And so I think that's where the Fed is likely to be a bit more cautious than folks are necessarily expecting, particularly priced into the short rate market. When they look at that services ex-housing segment of inflation, there's still some room for concern with, that pace running around 6% and not really coming down the way we've seen in a variety of different goods prices. And so probably it'll be a pretty good picture. It'll look pretty good for maybe 3 or 6 months. And then once those disinflationary pressures ebb a little bit, the real question is whether the rest of the economy, and particularly wages, start to come down. And that's where I think it's going to be a little more ambiguous. And that's why the Fed's probably going to be a little more cautious than what people expect. But look, there's been a big easing in the economy over the last 10 weeks. It doesn't mean that stocks can't continue to rally. It's just it's going to cause the Fed to be a little more hesitant than what folks are thinking in the bond market.
As we have this conversation, Tom, and as we have seen economic data soften a little bit, we do have Fed rate cuts pricing in for next year. Financials, it's your favorite large cap sector. Why?
Well, I mean, financials got a gut punch in 2022 and in 2023. They really haven't gotten a break really since 2009. We had a 100-year chart showing that financials price ratio to the S&P hasn't been this low since ever. In fact, we're just touching a support level that would have been where financials rallied in like 1950. So to me, this sort of constellation of factors that are pointing to pent-up demand and falling rates would be very good for financial stocks whose PE is at 12 times. And I think there is a consensus anchoring that like services inflation is high, but when you deconstruct services inflation, that some of the biggest contributors are auto vehicle repair, auto insurance, vehicle leasing, these are related to car prices and are really just lagging the step up in car prices over the last few years. So to us,
True.
I think there is an anchoring bias to think inflation's quite sticky when actually the trajectory's been kind of falling like a rock.
Tom Lee, Bob Elliott, thank you for kicking off the hour with me. Have a happy new year.
Okay, so yeah, the thing with Tom Lee, he's been on CNBC so much recently that I just feel like there's like nothing else for him to really add to right now, right? Okay, so anyways, this is my updated potential buys list. And by the way, let me know, chat, if you think there's any stocks I should add to my potential buys list for the first quarter, right? So we said the Planet. The Planet, I'm waiting to see like what happens in this business model. So I might start buying more Planet in 2024, but probably not in the first quarter because I'm going to see their next quarterly report and see what's going on with. I mean, they got Florida, a bunch of Florida locations opening. They got the Illinois opportunity, and so I'm just trying to figure out what's going on there. Upward's decent. Upward's decent, but I don't know if I really want to own it long term. ServiceNow, I've looked into them a bit. Couldn't quite wrap my brain around that one fully. So, anyways, that's where I'll leave the potential buys list for now. And by the way, throughout a quarter, what I do and what you guys might want to consider doing is, update your watch list as a quarter goes along, right? Because, I mean, you can get some huge moves. Like, even in a matter of 30 days or 60 days, a stock could have flown so high that you're like, I'm no longer interested in buying the stock, right? On the flip side, you could have a stock go down so much that wasn't even on your buy list, but you're like, oh my gosh, this is an extraordinary opportunity that you go add that one to your potential buy list at some point in the quarter. So I'll usually update this at least 2 to probably 4 times throughout a quarter, right? I'll probably update this list again in a couple weeks, then probably 3-4 weeks after that, then probably 3-4 weeks after that. And so it's always kind of like a moving list overall. But anyways, guys, appreciate you joining me. Much love as always, chat. Thanks for being here. Peace.